Good afternoon, everybody. Today I am joined with Mike Burgersburg from Dirty Bubble Media. In case you were sleeping under a rock this week, the second largest crypto exchange in the world, ran by Sam Bankman-Fried, who happens to be CNBC's Wonder Boy, often referred to as the next Jamie Dimon of the next JP Morgan, saw their exchange and sister hedge fund, Alameda Research, go bankrupt, which really all started to unravel when CoinDesk reported on the balance sheet of Alameda, which then got examined by a Substack called Dirty Bubble Media, ran by a guy named Mike Burgersburg, which then got liked on Twitter by a guy named CZ, who happens to run the largest crypto exchange in the world called Binance, which then set off a Twitter feud between Sam Bankman-Fried and CZ, which then led to Binance dumping all of their FTX tokens, also called FTT, which then created a ton of FUD and a massive amount of withdrawals from the FTX crypto exchange, leading to FTX announcing that they had an $8 billion hole in their balance sheet and filing for bankruptcy. So guys, I'm really happy that Mike took the time to join us today. He was instrumental in the events that happened over the last 2 weeks and was kind enough to sit down with us and answer a few questions. All right, everybody, enjoy the interview. Mike, thanks so much for joining us today.
Hey, it's good to be here.
Okay, so I just across my desk here, somebody sent me a tweet that shows Alameda's, which for our audience who's unaware, this was sort of the sister hedge fund that was effectively a part of FTX, depending on I suppose how you want to look at it. And it shows a pitch deck for them to try to raise money from investors back in 2018, and they had a product that offered 18% returns with no lockups. Now, when I see this stuff, and look, I come from the Canadian venture markets where we see a lot of garbage, to put it nicely. What do you think is going through investors' heads when they see 18% annual returns and no lockups?
You tell me. I honestly, I can't explain that kind of psychology, especially when you're talking like large institutional investors who have no excuse. I have no clue at all. It's amazing that someone could just ignore the most like cardinal signs of a classic Ponzi and just dump money into something like that.
It's interesting because we did multiple interviews with the Celsius guys over the last 2 years. We were incredibly fascinated by it because we looked at their marketing materials. And I think that first we interviewed one of the young guys there. I forget his name. I think his first name was Zach. And then eventually we did a couple of interviews with Alex Mashinsky, basically asking him outright, is this a Ponzi? And what was so fascinating about it was, they were offering these huge returns, but when we asked them, how are you generating these returns? We never got an answer that made any lick of sense.
Well, that's because they couldn't come up with a good answer themselves because they weren't doing it. We know from filings now that they never turned a profit. As far as if Vermont is accurate in their assertions, yeah, they never were generating the yield they claimed to.
So how did you end up spending so much time researching Celsius? Like what about it made you say, I gotta dive in? Was there a trade that incentivized you to do it, or were you just super fascinated by what was such a clearly obvious Ponzi?
Yeah, that'd be more accurate. I don't trade crypto. I don't own crypto. Don't really plan to anytime soon. Probably never, honestly. I do own a few puts against Coinbase, the exchange in the US, as well as Signature Bank, which actually turns out they were doing some banking with Celsius, but obviously I didn't know that until after the bankruptcy filing. No, it was purely from like fascination. When I was first learning about crypto about a year ago, I was kind of convinced there was a lot of fraud in the space. I mean, kind of obviously at this point, but at the time it seemed a lot of people just believed blindly in all of it. And a lot of the stuff you can't really understand without having learned about it a little bit. Some of the DeFi stuff is really kind of confusing at first glance. But I did recognize a company telling you that you could earn above market returns with little or no risk, and they couldn't explain where those returns were coming from. I mean, to me, that was like every red flag that I've ever learned about scams like that was present. And so I just kind of got interested, and it kind of grew from there.
I'm curious, did you spend much time on Alex Mashinsky? Because when we chatted with him, he wouldn't stop telling us about how, I think he said that Celsius was his third unicorn and he invented VoIP. I looked into it, and I'm not a researcher at your level, but I couldn't find any evidence to support these claims that he invented VoIP.
No, and that's actually that's a big part of the reason. Because I mean, there are other crypto lending firms, right? And I mean, BlockFi is another example of one that collapsed. The reason why I focused on Celsius partly is their relationship with Tether, just because I was curious about how Tether actually operated, but it was because of Alex. He was different because he's this guy who's older. He has all this supposed experience, whereas most of the other people in crypto are like young guys with no background, so they can say whatever they want about themselves, and it's hard to check that. But with him, he made all these big claims, and that was where I first started, was saying, okay, well, is any of this true? And none of it was true. Like, he didn't invent VoIP. His original company was not involved in the VoIP business directly. It was actually this concept of trading bandwidth, which incidentally Enron got involved in around the same time. And actually, there's an article I found that claims that Enron stole the idea from Mashinsky. So he did have an original idea, but it turns out it was a totally uneconomic idea. The company he founded, like, essentially went bankrupt. Basically everything he told people about himself was either a fabrication or a dramatic exaggeration of the reality.
Obviously, you can't answer this, but it's just something that I'm fascinated by, having been around companies that raise tremendous amounts of money with terrible operators. Do you think that Alex Mashinsky or even a Sam Bankman-Fried really understood the risks and the ultimate model of what they were doing? Do you think that they knew that they were even running a Ponzi?
Well, I mean, the concept or the study of psychopaths and sociopaths is, still evolving. But the one theory I really like is that people who are sociopaths don't experience stress and fear the same way a normal person does. So these kind of people, they'll just do things that no normal person would do. They'll take risks that no normal person would take, and they just don't process it the same way we do. So, I mean, look at what Sam was doing for all these years. I mean, as far as we can tell, this thing may have been a Ponzi from the very beginning. Look at the thing you mentioned at the beginning, those documents where they were trying to raise 18% from people. That was a few years ago. So, I mean, these people, like, they don't think about things the same way we think about them. That's how they get trapped into these kind of traps of their own devising, essentially.
So we spent quite a bit of time this week trying to really just kind of get to the bottom of, or at least understand what's happening. And I'm wondering if you could help me out here. When I'm looking at the Celsius tokens or the FTX tokens, FTT, do these represent equity? We kind of hear people throw that term around, and my understanding is that part of the payout from Binance getting buying back their stake,
selling their stake,
selling their stake back to FTX, was that they received FTT tokens.
No, these are not. None of these tokens confer any kind, as far as I know. I mean, there's some of these DAOs and things that theoretically, I guess there's maybe a legal claim somewhere, but I don't think so. No, none of these tokens confer any kind of legal claim on anything. They're literally just pieces of code floating around on blockchains, and they have no relationship to the companies that issue them beyond the fact that the company issued them and generally retains most of them on their balance sheet. It's a way just to spin money out of thin air. That's all they are.
It's funny because I saw you on other podcasts. I won't say which one, but people were throwing around the terms that these represented equity. And I was just, I'm going through their white papers, hitting Control F equity, and I'm not seeing any of that.
No.
So it begs the question, if this doesn't represent equity, and it's basically just, as I understand it, both in the case of Celsius and FTT, you're just getting some sort of trading discount for holding them. Is that enough of an incentive for any rational person to actually want to own these things, or are these just pure Ponzi's?
They're pure Ponzi's. I mean, so the FTT token is a little bit different from the Celsius token. A lot of individual people did own this Cell token. And the reason why they owned it was a lot of them actually were confused and somehow believed that there was some sort of equity relationship. Every time I would go on their AMAs, because they would have these weekly AMAs with Alex, there would always be at least one person asking some question about how, like, do we get a dividend? Like, or like, a lot of them would ask, like, the company just raised all this money, but like the token's price is falling. How does that make any sense? Like, it should be worth more because the company is worth more. Like, the people who were invested in this didn't actually understand what they were buying. So there's that. Um, no, this is just a way to create something that looks like it has value. It's the shell game. That's all they're doing. Um, they use these quote unquote exchanges, and they move money around in a way that makes it look like these things have value, and then they mark them to market on their balance sheet, and then say, hey, look, I have, in the case of FTX, almost $6 billion that, or Alameda, same difference, the same company. We have $6 billion, and then they would go to other businesses and borrow against them. So, like, Voyager went bankrupt. Alameda was borrowing from Voyager using these FTT tokens and also their Serum tokens, which are another total scam token that they held, using those as collateral. So Voyager will lend them real money against, I mean, literally thin air. And that's how all of these crypto companies, it's how all of them, any of these companies that have these pre-mined tokens, they're all running the same scheme essentially.
It's just absolutely wild when you start to actually map it out and see that some people are accepting these securities that are, I don't know if you want to call them securities.
Well, they are securities.
Yeah.
I mean, every person I've talked to, securities regulators, I've talked to lawyers. I mean, I'm not a lawyer or a securities regulator, so my personal opinion does not count very much. Although I have read the Howey test, and I feel like they do me. But everybody I've talked to said, yeah, I mean, almost all of these tokens are securities, and I believe the SEC in the U.S. has said the same thing. They just haven't enforced any of the laws yet, which is very unfortunate for a lot of people.
What do you think's going on? And again, I'm asking you to speculate on something that you probably can't answer, but I think it's a fun question. What do you think's happening in the office of some of these institutional investors? Like, let's say the Ontario Teachers Pension Fund, which I'm based out of Ontario. It's a very highly regarded investment fund. Do you think it's just a case where the crypto bro in the office kept talking about the price of Bitcoin and it went up, and we got CNBC that's got the price of Bitcoin up on the screen every 30 seconds, and they're devoting, say, 10% of their morning to talking about FTX. They basically made Sam Bankman-Fried out to be, they refer to him as the Michael Jordan of crypto. Do you think that that's kind of what happened here with some of these institutional investors? It was just sort of a case of that annoying crypto bro who watched too many Michael Saylor videos getting to say, I told you so? Or do you think it was just a case of like, we don't know where this is going, but it could be a thing?
I think it's a mix of those things. I mean, CDPQ, which is in Montreal or Quebec or whatever, also invested a lot in Celsius.
Yep.
And in both instances, these are, very small portions of their total assets, which is the excuse they've been using in both cases is, well, it's only, half of a percent or something of our total assets. So who cares that we invested in this obvious Ponzi scam? I mean, I can excuse the FTX investment a little bit more. I mean, they had some of the most prominent, VC firms investing in them. They were very public. I guess people thought Sam was smart. I don't know. So I can see people, like, if you didn't do much research into what crypto actually was, and then you saw all of these other supposed experts going and investing in these companies, and like you saw him taking pictures of politicians and having his name literally on the umpires' uniforms for the Major League Baseball, which is insane. You think, okay, maybe this guy has it together. Maybe he knows what he's talking about, and I can see how they could get hoodwinked, but. Yeah, obviously they didn't do that much due diligence.
How important do you think liquidity ultimately is to this space? And obviously it's important, but what I'm getting at here is that we're now at a space or a time in the markets where, the US 10-year is yielding, it was yielding north of 4%, which is attractive for many investors. I don't see them wanting to throw money into a crypto exchange or go and wire money to Binance and do so. So it looks like a lot of liquidity is drying up here. Do you think that this is ultimately going to lead to a pretty bad place for some of the other names that are out there, like a crypto.com or a Binance?
I mean, they're already in a bad place. So it's a combination of things. I mean, part of it definitely is the big picture macro stuff. I mean, no question. The other part of it is that, like all schemes, it's an infinity scam, right? Like crypto attracts a certain type of person for the most part. There are people who are just ordinary people who get sucked in, but for the most part, it attracts like these younger kind of nerdy guys who think that they're really smart and they're you know Dunning Kruger themselves into losing their life savings. Um, so they've run out of suckers. That's the other part of it is that they've gotten to the point where they've kind of the scam has spread so far that they can't find any more people to suck money out of. So I think there's part of that as well. And I think we're starting to see the effects now. I mean, think about where most of the people bought in who are in this market. Most of them bought in, they didn't buy in where the prices are now. They bought in well after prices were well above what they are now. And a lot of people are down real big now. So they aren't going to be sucking their friends and family into this thing anymore.
How closely are you watching Tether? Like, do you think that Tether is when Tether really unpegs and we started to see it sort of happen this week? I think it broke 1 cent on the dollar, or 99 cents. Do you think that this is the sort of the Super Bowl of crypto Armageddon, is when we see Tether start to unwind?
I mean, yeah, it's people have been predicting that's going to happen for a long time. They have to keep that thing alive for as long as possible, and they will sacrifice anyone to do it. Um, I think they probably have a lot of the money that they claim to have. I don't think they have all of it. And in fact, their own attestations, there's a couple of good posts on Twitter about that today, about how even if you take everything they say in their attestations as being absolutely true, it still proves that they actually don't have all the money that they claim to have. Just be based on like the way the market has changed in the past couple months. So yeah, I don't know what's going to happen there. I mean, there's a lot of money still floating around that they can use to try to keep it safe. And they will use it to do that. I mean, they'll put hundreds of millions of dollars through different swaps and things in order to protect the peg. So I don't know. I mean, it'll be interesting to see if it happens. But I mean, I do think that if any exchange failing or any exchange should not have failed, or the failing of that exchange is going to have a real impact on the market or crypto in general, FTX is probably one of the worst ones to fail for them because they had their name everywhere, right? I mean, they bought ads everywhere. They had their name on the Miami Heat Stadium. They had their name on the umpires. He's spending tens of millions of dollars on politicians, getting his pictures with all these regulators. Having that guy exposed as one of the biggest Ponzi schemers in history, um, that's gonna really tarnish whatever this industry was trying to develop in terms of a reputation. Like in terms of people to go down, he was probably the worst person to go down. Um, so saying like nuclear or the Armageddon for crypto, we may have already started it.
Something I've been thinking a lot about is that Larry David commercial, and just sort of the negotiations to get him to agree to do that commercial. Probably started with, "I have no interest in it. I think it's dumb." And they came back to him and said, "Well, why don't we do a commercial where you say you think it's dumb?" And they managed to get Larry David to attach his name onto it. And somehow I think he's walked away looking brilliant in this whole thing.
Yeah, I mean, I feel like I was disappointed at first when I saw that commercial. Although it honestly, that's the thing is like there are times when you hate the person doing it, but they're doing a good job. That was a great commercial. Like it really was. Like genius commercial. And I like Larry David as like I'm a fan of it. So it's like, and that's really perfectly in character for what Larry David acts like. Like he's like the kind of jerk who like does a lot of dumb things. Like that's exactly what Larry David's character would do in his show is like go end up being the sponsor of a Ponzi. You know what I mean? Like it's perfect. It's so like, but no, that's the problem is that they hired all these celebrities and Tom Brady apparently had a lot of money in this thing. I thought that Tom Brady was making money. It turns out he may have lost some money on this, which maybe is deserved. I don't know, but when you have the world's like one of the world's biggest superstar sports people like shilling your company, that's going to hurt them when everybody finds out that it was a giant scam.
And I just saw a clip about 10 minutes before we started this interview of Kevin O'Leary saying, if
Yeah.
there is ever a place I can be that I'm not going to get in trouble, it's going to be at FTX.
That's what people thought. And that's what I mean about the effect this is going to have. Because like Binance going under or Bitfinex going under, like, people think of them as being like, oh, they're offshore and they're unregulated, and the people that run them are kind of shady and like hide behind the scenes a lot. But Sam had his face like everywhere. Sam had his face on the billboards. I mean, so when this guy is, it's like Bernie Madoff, like if he was in public, you know what I mean? Like that's the effect this is going to have it's just starting to be felt. And all these regulators who took the pictures with their shaking hands with him, and Gary Gensler, who apparently was like negotiating with him directly about like FTX's role in all these markets, which is insane. And the fact that he spent $50 million on, I mean, Biden received a bunch of money from him. These guys are going to have to do something in order to cover their butts now. And so in terms of regulation, this is going to have some interesting effects, I think.
Especially, you got to go back to that clip on the Odd Lots podcast where Matt Levine joined Sam, and he effectively described the whole crypto universe as a bunch of Ponzi's, where yeah, you just put money into a box and then it's worth 10 times more, and then the more money comes in, and hopefully there's it's just it's insane. I suppose we don't know all the details of exactly what was happening with Gensler, but there should be some sort of
backlash,
I'd imagine, if he was actually having conversations with Sam over trying to find a way to make the regulations work.
Yeah, this is a big deal. That's what I mean is just like people are just starting to realize how big of a deal this is. Right now, everybody's worrying about, who is financially directly exposed to this thing, which could be a lot of people. And I think we're just starting to find that out as well. But the longer term thing is the regulatory stuff and the psychological stuff. That's what's going to really hurt. So like an example would be, the Terra Luna thing happened a few months ago, this like algorithmic stablecoin that was also a stupid Ponzi that blew itself up. So like Celsius Network, which was also a Ponzi, had been invested in Terra significantly, several $100 million. But they actually pulled out in time. That was one of the few things I watched them do that actually made sense. Like they were smart and they got out before the rest of the market realized how bad things were. And they only lost a couple $1 million on the whole thing. But it was the public perception of that afterwards where everybody said, well, you guys were invested in a stupid Ponzi, that led to withdrawals going up. And then that's what destroyed them. So it's not about necessarily your direct exposure. It's also about how people react after they see something like this happen.
How big do you really think that the crypto universe actually is? I mean, there's some reports that say that there's 190 million people who own Bitcoin. I don't know. I live in Canada. I hardly talk to anybody who owns Bitcoin. Perhaps it's owned by a lot of people on Robinhood in the States. I don't know. But I got to say, you were a big part here, and congratulations on that, of the events that happened over the last couple of weeks. And then I see that you're on with Cass and Bennett, two other guys that have just been following this space brilliantly for the last 2 years. And I look and there's like 350, 400 people watching you guys live. And then I go on Twitter and I see Raoul Paul from Real Vision having a Twitter Spaces. And he's apparently got 5,000 people listening to him live. My assumption is that is mostly just fake bots. There can't be 5,000 people who actually find Raoul Paul interesting enough to listen.
Oh, yes, there can be.
Yes, there So you believe it's real?
Oh, well, I mean, I think some of it's real. Like, I don't know how how many people own Bitcoin. Like, is that based on the number of addresses out there? Because that doesn't mean anything. Like I just posted a thing about one of these other pre-mined tokens from the exchange. It's called OKX, which is a fairly large exchange. And there's like 37,000 addresses on Etherscan that hold this token, but like all of them are basically like fake addresses, essentially. I don't have to go into detail about it, but so there's maybe like for every like 1,000 addresses, there may be like 10 people actually who actual individuals that actually own this thing. Like most of it's not real. So like, I don't know how you actually ascertain how many people really own any of this stuff. But yeah, it's millions of people. no question. And there's billions and billions of dollars that have been invested into this thing. I mean, USDC has never issued an audit just like Tether, which has kind of like, I've never understood why. Like, it shouldn't be that complicated to audit something like that. But I believe they have the money. So there's 50-60 billion dollars there.
They also filed an S1 with the SEC, which demonstrated that they must have thought that they had the goods to get an audit.
Oh yeah,
right?
I mean, I don't think there's anything fraudulent in terms of their reserves there, at least. But that shows you how much money. I mean, or like FTX. I mean, the valuation of FTX was 32 billion. Of course, that's inflated, but they had raised $2 billion from various firms. Celsius got 750 million. So like, and there's obviously other examples out there. So like, there are people. I mean, there have been billions and billions and billions of dollars poured into this thing, which is just the amount of value destruction that's happening right now is just unreal. If you think about in terms of the massive amount of computing power that's been wasted on this, and the energy that's been wasted on this, and the people's time, like the people doing this, some of them are really smart people. I I started out thinking crypto was total bullshit, and it basically is, but there are some people out there who like legitimately believe in it and are really trying to do it in an honest way, and coming up with some kind of innovative things, although I don't know if they'll really work. But like all their time, to me, all that time has been wasted, and all these people that could have been working on something productive have instead squandered a couple of years of their lives, and along with billions and billions and billions of dollars of value that's just been wasted. It's one of the worst. I mean, it's one of the worst things that could ever happen. Honestly, it reminds me of the is it Albania that had like the whole countrywide Ponzi scam that basically led to a civil war right after the breakup of the USSR. It was one of those countries had basically the entire country got involved in the Ponzi that just destroyed the country and led to a war. That's kind of like how bad crypto is.
So last question for you here. You're obviously, I assume, going to be researching tonight, checking your Twitter feed and looking at stuff.
Well, if Twitter's still
weekend.
there, because
it might
we'll
go
see.
bankrupt.
Yeah, it might just exist.
What are you watching closely in terms of the various exchanges or tokens that are out there in terms of what you think is really interesting right now, given the events?
I mean, this is what I said on I think when I can't remember who I was talking to about this, but somebody was asking me who's next to go, and my answer is that there is literally no way for anyone to predict that, because we have no idea yet who's exposed. And so I mean, I'm just kind of watching everything just because I'm like to do that. Like I said, I am looking into some of these other exchanges that are also kind of seem to be really heavily dependent potentially on kind of the same scheme that Sam was running with this FTT token that ended up blowing himself up with. So I mean, there's that. But ultimately, a lot of this stuff is not on chain. It's all these other obligations that we can't see and don't know about that end up bringing these things down. So, I mean, your guess is as good as mine. I have no clue. I think some of these market making firms that are kind of behind the scenes probably are in some trouble just based on their interactions with Alameda. But we'll see. It also depends on how much money the VCs and things are willing to keep dumping in order to save these investments. Once they start walking away and just taking the loss, a lot of people that are dependent on these external sources of revenue will quickly fold.
The VC component is so interesting too, right? Like you see those quotes of when Sam met with Sequoia, and then you see that Sequoia threw a bunch of money into FTX, but then apparently he threw a bunch of money back into Sequoia. So it's probably the whole thing was just a swap, which I assume that like at this point, I assume that most of these transactions we're seeing that are done sort of privately in this space are just sort of swaps where, hey, we'll find a way to circle the money around.
Well, the thing that gets me, that's so funny to me, is that like, one of the dumbest things that Celsius did, in my opinion, was investing hundreds of millions of dollars in Bitcoin mining. Obviously, that's a really risky decision because if the price of Bitcoin falls, you end up not making any money. And not only do you have no source of revenue, also the equipment that you spent hundreds of millions of dollars on is essentially worthless because nobody's going to want it. And so I thought, man, Alex was not very smart to do that. It turns out Sam, based on the recent reporting by the Financial Times today, $1 billion of their venture funding went into mining.
Into Genesis? Was
Yeah.
it?
Yeah. So it's like even he couldn't come up with any better way to try to make money. Everybody ends up going to mining, which is a horrible investment. So like there's no source of like that's what I mean about there's nothing productive here. You can only run so many scams before there's nobody left to scam, and then you don't have anything productive to back you up. You have no product to sell. You have nothing of value.
Yeah. Mike, thanks so much for hopping on here and doing this. I know that you're probably getting a lot of requests right now. Congratulations on all your success. I think that you were really pivotal in covering this story, and Celsius, obviously with CZ liking your tweet, and that kind of got it sort of the attention of the mainstream FinTwit. So thanks so much for hopping on here and doing this. And for anybody in our audience, if you're not following Dirty Bubble Media on Twitter or reading the content, which is just written in a way that I think anybody can understand, I don't know what you're doing. So thank you so much for hopping on here, Mike. We really appreciate this.
Thanks. It was good to be on.
All right, everybody. Thank you so much for watching. And if you could do me a big favor, please hit the like button, subscribe, and ring that notification bell, or let us know what you think in the comments. All right. Thank you, everybody.